Welcome back, everyone. Next up, we have Houston Natural Resources Corp. It trades on the OTC Pink sheets under the symbol HNRC and is a diversified energy company with oil and gas interests. The company has recently acquired 100% interest in Cunningham Energy LLC with appraised reserves of $352 million. Happy to welcome back Chairman and CEO Frank Kristan. Nice to see you, Frank.
Good morning, Anna. Nice to see you as well, and thank you for having me on the show today.
Yeah, happy to have you back. So give us a little update since our last appearance on our conference. What's new?
Well, since we've had the last conference, yes, we have completed the asset spinoff of Worldwide Diversified Holdings, and we've filed the registration statement with the SEC. That process is ongoing, and we can't really comment on it, but we continue to engage with them and fulfill the requirements for that to be listing in the near future. As you mentioned in the beginning, we completed the acquisition of the 100% interest in Cunningham Energy with the appraised reserves of $352 million. The company's reserves now are at around $2.60 in value, and we are also then completed an acquisition of a 9% interest in the placer claims with which is called the Nugget Trap Placer Mine in British Columbia, and that's 573 acres, and accompanying permits and authorizations. We expect that reserves of more than 500 million in the initial drilling and initial mining operation. We also completed the acquisition of the 40% interest in Rhino Energy, which has an interest and an investment in a junior energy company that's located in Canada, and that has also significant reserves as well. We also additionally completed the sale of some of our current energy assets at realizing 15 cents per share, and we will look at a dividend potentially of that interest later this year and an announcement on that. So those are the things we've been working on, as well as the underwriting and on the uplisting of the company. And in addition to its additional, we are still looking at other acquisitions in energy and energy services worldwide.
Lots of updates on your end. Frank, can you talk a little bit about the pending name change to Cunningham Natural Resources Corp, CNRC?
Great, thank you. Yes, we've filed with FINRA to review the name change from Cunningham Natural Resources Corp from Houston Natural Resources Corp, which is the Nevada Corporation, and Houston Natural Resources Corp is now being changed, legally it's been changed to Cunningham Natural Resources Corp, but is being reviewed by FINRA for a name change, for a symbol change, and for a CUSIP change. And we're still waiting on that review to be completed.
Okay, perfect. Well, Frank, I'm going to give you the floor so you can go through your presentation, and we have questions for you at the end, so call me back when you're ready for those.
Great, thank you, Anna, appreciate it.
Yes.
Okay, with the presentation that we have of the Cunningham Natural Resources presentation to the Emerging Growth Conference, we have our first slide there, which is of our disclaimer, which is standard for our presentation today. Our key investment highlights is that we are focused on a traditional oil and gas opportunities and energy transition materials, including mining opportunities in copper, lithium, gold, as well as other precious and rare earth minerals. The investment focus will be global, with sustainability at the core of the strategy. As we've mentioned before, we've completed the acquisition of Cunningham Energy. We've got a proven management team with more than 70 years of experience combined. We have an unlevered balance sheet with minimum debt. We are a diversified energy company. We also have transactions pending. We've made an investment in an energy SPAC, HNRA Acquisition Corp. Symbol is HNRA on the New York Stock Exchange, and that has a pending transaction for a D-SPAC, looking to maybe complete that later this year. we're excited about that opportunity, and it has taken us a little bit longer than we had anticipated, but we still believe the strategy has been correct, and that will be shown out in the near future. The Canadian company that we have a transaction with through Rhino Energy is a junior energy company and has also exciting opportunities for us to be able to do further development in that region. We have a pending transaction with the copper mining company. We're excited about that because it is a mining company, a copper mining company that's actually producing. And so we've got revenue based on its existing operations, in addition to having significant reserves. And copper is one of those elements and materials that are needed in the energy transition as well. We're looking at pending acquisitions in the oil and services business as well. And we hopefully expect some announcements on that in the near future. Our portfolio companies that are outlined in the slide there, and we've got some background on Cunningham Energy, which was originally founded in 2008 for the purpose of acquiring, exploring, and producing oil and gas in Appalachian, Illinois, and the Williston basins. Cunningham Energy owns approximately 600 wells, 170 are reworks with a 98% successful completion rate. They are the pioneer of shallow horizontal oil drilling in West Virginia starting in 2014. So they've got approximately 30,000 net acres under in numerous transactions through the Appalachian Basin. With the valuation, we're proposing up to 68 well drilling program being completed over the next few years, and expect that to be in 2024, getting into production on a number of those wells. The H&R Acquisition Corp, as I mentioned before, is listed, originally had an $86 million special purpose acquisition corp, and it is currently made an announcement that it is working on an acquisition of Pogo Resources is the name of the company. Rhino Energy, we had completed a 45% Rhino Energy, and it has a management team and global expertise in operating in more than 27 countries. We're working on a number of potential acquisitions with them and with that team, who has a strong track record. Where it's an initial Rhino is initial investment in a development company, a junior energy company in Canada. Cunningham Mining which is what we have acquired a 9% interest in, and that has completed the acquisition of the placer claims known as the Nugget Trap placer mine, and we've got 573 acres there and permits. With the original indication is for 25 grams of gold per cubic meter, and that will process a permit for an initial 15,000 cubic yards and an evaluation of released over 500 million on the potential reserves there. CE Energy sponsors, we own a percentage, 15% of CE Energy sponsors that are sponsoring CE Energy Acquisition Corp. That's filed a registration statement for 100 million as a special purpose corporation, and it tends to file. At the moment, we are still in the registration process with that special purpose acquisition corp. With Worldwide Energy Corp, we had formed that as a special purpose to acquire companies in the energy and energy services, including energy transition opportunities. We currently have some potential acquisitions and going through Worldwide Energy, and we'll be able to make announcements when those are completed. We also, after spinning off Worldwide Diversified Holdings, there is the company still owns 17% of that as a result of the spin-off, and we are working on getting Worldwide listed, and with additional acquisitions that Worldwide is looking at in some of the telecommunications, technology, and internet-related areas. The next, the next slide is on the management, and there's some background on myself with respect to expertise over the last 30 years in this middle market and acquisitions in energy and technology and telecommunications. Originally, I am from Australia and my University of Western Australia degree. Ryan Cunningham is the manager of Cunningham Energy LLC, and his background is significant both in the energy markets and also originally a sales trader with Oppenheimer and Company. And he is also a board member of the West Virginia Oil and Gas Association. Thomas Fontaine has 30 years of industry experience and extensive oil and gas background, and he is with Rhino Energy, and he's been involved in a number of startups in the energy industry as well as large companies that have sold for over $1 billion. And so he's principal listing on some in the ASX and as well as in Canada. The next slide is some further background on breaking out of Cunningham Energy, which is established in 2008, and it's 30,000 net acres. Additionally, they have the opportunity of 960,000 net acres that operating in Canada. They've got a net revenue interest in a 75% net revenue interest. There's over 500 million barrels of oil on the earn-out potential of that operation in Canada. Cunningham Oil also works on oil field services and provides oil and service equipment. The potential recent infrastructure deal, there was 16 billion investment in legacy cleanup. And so we're looking at projects there for well site plugging, remediation, and restoration activities. The CE Energy Acquisition Corp I mentioned before is the special purpose acquisition that we currently have in registration. The next slide is the Karuba Copper Company, which is the investment that we have that we're making currently, and it's located in Marrakesh, northeast of Marrakesh. It's connected to the Moroccan power grill, and it was one of the first producing mines in 2017. And those are photographs of it and its location. The growth stage of is what we're excited about. Since 2011, it's required a significant land position, which is some 300 kilometers hosting in the Kingdom of Morocco. The position is formed for the basis of a growing copper mine and processing operation in Morocco. Morocco has proven to be a very favorable jurisdiction for mining and an excellent tax regime. We've got an excellent operating team there, experience including Scott Ham as a former chairman and CEO of Inco. The concentrate is currently shipped to Casablanca for export currently to Europe. We got a clean concentrate that's sold to Switzerland under annual contract. There is a cities and municipalities, so there's no need for infrastructure and operating costs for employees. Excuse me. The cash operating cost is US $1.40 a pound. And so upon completion, we believe the updated resources that they will be producing nearly $20 million of projected annual free cash flow. And so that's what we see as the exciting opportunities that we've got ahead, and we look forward to. We'll also have our quarterly reports coming in the near future by the November 15th date. There was one other slide I think I did overlook, which was the actual organizational chart, slide number 4, which does outline the holdings that we have in a chart form, the 5 major holdings and additional layout of what it is. So, and so I think that's with it, Anna. With that, I think we can open up to questions.
Okay, great. We do have some questions for you, Frank. Let's start with Lucas Strozak. Lucas says, doing great, keep it up. But he asks, what do you think about the possibility of the negative effects of solar and the distribution of electrical power chargers hitting the market pretty heavily as a new energy transition and its possible impact as a dividend entry?
One of the, and I suppose since for 40 years now, I've been involved in solar from Australia when they're originally putting solar panels up on the rooftop. It's still solar and wind and alternative energies, which we've had some exposure to, are still a minority interest in terms of what the energy markets are. And so I still don't see a major impact on those. And I still think you're going to need energy and energy resources going forward from the oil and gas industry for at least another 20 to 30 years. And so in the last 40 years, it hasn't made the impact that you would have thought in the early 80s that it was going to make over the next 40 years. And so whereas I think it's great and there's a lot of opportunities and where it can work well and it does have impact, but in terms of the overall energy use, it's still going to be in a minority of what is needed for the company, for the country, and to provide its energy.
Okay, thank you for that. Frank, we have a few questions from John Bauscha. One, when do you expect WDHI to begin trading? And what's the basis for evaluating WDHI at $3.50 per share in previous press releases?
The information on Worldwide Diversified Holdings trading is, at the moment, we are in the registration statement, so we really can't comment on it in terms of timing with when that will be completed with the SEC, and at which point going forward, we'll be able to make further announcements about when it will start trading and what who the market makers or who the market is, where it'll be trading. The second question, initially, the valuation of $3.50 a share was based on the net asset value of the outstanding shares that had been issued in Worldwide Diversified and the valuation of the assets, of what the cost basis were of the assets. So approximately at that moment, there was around 52 million in assets and there was around 15 million in shares outstanding. So that was originally the approximate valuation of it.
And a follow-up question about the shares. Will all the shares that have been issued to current shareholders be freely trading, unrestricted shares when WDHI begins trading? And if not, what percentage will be restricted and for how long?
Generally, all the shares are registered, will be registered as free trading, registered for sale. There are some affiliated shares, whereas if you own shares that are more than 10% of the holdings or management, or in this case, Worldwide will CNRC will still own 17%, so they'll be an affiliated, so those shares will be restricted. And so generally, it's the same rules applying for restrictions with respect to that.
And can you tell us when will the audited results be available for HNRC and WDHI?
The HNRC audits would be, we're completing the September 30th numbers, and then they're on an unaudited basis. And then the audit for the year end with respect to HNRC would be for 21 and 22 and 23. Would be filed probably earlier in January with respect to those numbers. And then with Worldwide Diversified, they have filed the initial audited statements with the registration statement, but the other ones will be with the updated filings when they file for the September numbers as well.
And when will serious rework efforts begin on the wells controlled by HNRC and Cunningham?
The Cunningham wells are, at the moment, we expect that to happen in 2024. They're going through environmental EPA review, and there's work being done with them before we can get further into production. So expect that at early 2024.
And last question from John. What's the current monthly production of reclaimed water from the HNRC oil water treatment plant near Houston?
That was part of the Houston Natural Resources Inc. and part of the sale of the assets that we did. And so that asset is no longer part of the part of CNRC. And so that's now we realized the 15 cents a share from that sale, and then we'll be able to dividend that out to the shareholders.
We've got a few questions from Ben Huron. How much has HNRC invested in Rhino Energy?
We acquired the 40% interest, which I think we've disclosed, was for 3 million shares and common, and I believe 1 million shares of preferred. And so depending on market price as to how much that dollar value, but it was a share acquisition and a share swap. It wasn't cash invested.
And how much has Rhino Energy invested in the Cold Lake and Wabasca areas of Alberta?
It's disclosed in filings. It's approximately 1.5 million.
Okay. And what kind of value would this currently represent for HNRC?
We see the upside on that valuation because of the opportunity with the team management and the other opportunities that Rhino is looking at that are significant opportunities with it. So at the moment, it's the approximately $1.5 million is the valuation on it.
And where do you see the relationship between HNRC, Rhino Energy, and Petro Frontier going?
I can't comment on the other because we're under confidentiality agreements with respect to actual companies. So I can't comment on. I can comment on what we're doing with Rhino, but I can't comment with respect to any other publicly trading company that Rhino's working with.
R. Lyons asks, do you believe the company will be uplisted in NASDAQ this year or early next year without having to do a reverse split?
The company is evaluating all its opportunities. We would prefer to uplist without a reverse split with respect to, depending on what acquisitions we would complete between now and the end of the year, that may or may not require that.
And do you have to do dilution of shares for the merger acquisition? And if so, how many shares dilution?
What happened with the acquiring back of the assets, we were able to acquire back a significant number of the preferred shares that were then used to acquire the Cunningham Energy assets. So it wasn't as much dilution as we would have had to have done with respect to if we hadn't acquired back those assets and those other preferred shares.
Can you talk about your projected earnings and net asset value for the end of the year of Q4?
I believe we'd reported that we're looking at $2.60 for the net assets, and we were looking at around 8 cents per share as pro forma for the end of the year.
And can you talk about the company's current float, any outstanding shares?
I believe it's updated on OTCmarkets.com, and I think it's around 150 million shares outstanding, and the float is around, I think, 50 million shares, maybe 60 million shares, but I'd have to check because it changes daily. So it's reported on OTCmarkets.com.
Okay. When will the trading symbol change to CNRC, and will the share structure remain the same?
We are looking at, it depends on when the FINRA review it takes. I mean, at the moment, we've gone through 3 FINRA reviews in the past. Some have taken 30, 60, 90 days. Some have taken 180 days. And so when they've completed their review, we expect it to, the name change to be completed the symbol change and then the QSIP change. With that, the structure would remain the same with the change in the market name. It would then get a new symbol, a new name, new QSIP number, and so for trading purposes, it would be a new entity, but the share structure would remain the same.
And Austin Rubino wants you to clarify, just give a few more specific details about the fourth quarter dividend proposal. And is this a cash dividend or stock?
The company is reviewing all its options for additional compensation, additional dividends to the shareholders, which would include or could include a share dividend or a cash dividend, depending on the position that the company has at the end of the year. And so we had been looking at that, whether it was going to be cash or stock, but we haven't made that decision yet.
And David Johnson wants to know, in your best estimate, when will this be tradable in the markets?
Which one would be tradable? I'm not, if you're talking about the worldwide or the dividend. I'm sorry, it probably means the dividend.
Yeah, the dividends.
Yeah. The dividends historically have taken anywhere from 30 days to 6 months, depending on review process and other market conditions that are generally beyond the company's control.
And David Johnson also asks, why have we not expanded the HNRI business model by increasing our refineries, by taking in water from the oil fields?
We have looked at, the company made the decision to realize a significant profit on its investment with it, and is currently looking at other opportunities by divesting there and allowing the shareholders then to get more return on it. We have evaluated other opportunities in the water remediation business, and those opportunities have been, we're still negotiating on a couple of them that do have other water treatment plants as well.
Wonderful. Well, Frank, thank you so much. Do you have any closing remarks for our viewers?
That's great. Well, Anna, I wanted to thank you for your time today, and I appreciate the opportunity to speak. That we still believe the company's significantly undervalued, and we see the opportunities, and we also wanted to show that we have executed on our business plan for the last 2 years, and we'll continue to execute and try to enhance shareholder value in 2024.
Perfect. Well, thank you so much, Frank. We look forward to you coming back in the future with more updates.
Great. Thank you, Anna.
Okay,
Bye.
everyone stay with us. We'll be right back.